I already know when entrepreneurs come and want to talk to me that they want to sell, they want investment. The entrepreneurs I like are those who do not, allow me to second guess. Meaning they're gonna say, here's a company, and
Yeah.
the first meeting, they treat me as their partner. Here is what's going well. Here's a challenge. And they take that moment to learn. What do you think about this? This is what we want to do next. What would be your recommendation? So at least if it turns out we don't fund them, right? They learn something from that hour.
Hello, everyone, and welcome. Fortunes of the Brave. Definitely, we get to chat today with my guest. My guest today is a venture capital and technology executive, at least in one part of her life. That's not all she does or all she is, with more than 20 years experience in high-tech, VC, and impact investing. She's launched 4 VC funds, 3 early stage and 1 growth stage, and is the board member for 4 high growth companies in the US, Japan, and Taiwan. She serves on 3 funds in the US and abroad as co-investor, advisor, and investment committee member, and is an advisor at Berkeley, my alma mater, Skydeck Alchemist Accelerator, and UCSF Health Hub. She's considered, I can guarantee you this, just by that introduction and my little conversation that I had with her before we started recording, she's considered a trailblazer in the industry and has been awarded the top 25 Women of Influence in Silicon Valley distinction. And she was the first Thai woman to launch an impact VC fund in Silicon Valley, the first Thai professional faculty member at UC Berkeley, Haas School of Business, and the only Thai person on Intel's history selected by CEO Paul Otellini to the company's leadership program, where she helped launch the first Android tablet. Oh my goodness. Jeep Kline, welcome to the conversation, Jeep. How you doing?
Thank you so much, Mary. I'm doing really well. I'm excited to be here.
Yay. All right. So let's start out. Now, I just have to tell you that to frame this conversation, now I consider all of us as innovators. So I don't think of innovation as the Steve Jobs and the Elon Musks of the world, okay? I think of innovation as each of us taking our previous experience, both personal and professional, and applying it as innovation to what we're trying to do going forward. So take me through that resume. That brief resume was amazingly impressive. Now take me through what brought you here. What path did you take to have that incredible resume as the result as of right now?
Yeah. Well, thank you, first of all, for having me here. Perhaps if I look back and I'd like to say connect the dots. The first pivot point for me was in 1997. It was in the year of Asian economic crisis. I was in my high school back in Bangkok, Thailand. And that crisis impacted my family severely, and also a lot of other families throughout the country, which also spread out throughout Southeast Asia region at the time. So that drove me to study economics in college. I had the opportunity to study in Chulalongkorn University, and I just fell in love. I thought after 4 years, I'm going to come out and help my country and also Southeast Asia region to develop the policy to create a sustainable economic growth. I did not know that after 4 years, I wanted more. Okay, so I came to the US. I got scholarship from the University of Michigan to study the graduate program. So 2 years in, so I did a dual degree in master's, and 3 years in, I was told by a professor who now became my friend, Professor Kervin Charles. He's now the dean of Yale School of Management. At the time, he was a professor at Michigan and Arbor. And he told me, Jeep, the idea of building sustainable economy in Thailand is fantastic. But I want you to think a little bit bigger, based on, your approach, your thinking, your belief. Why don't you try? And maybe you should consider working at a World Bank. So um, I was like, how am I going to get into the World Bank that typically offer, a position to PhD in economics who graduated from Ivy League schools? I was none of those. So every long weekend, I saved a little bit of the stipend that I received, and I flew myself to the World Bank. Whoever pick up my calls and my cold emails, I flew myself and I pitched why they should hire me. I got probably 49 rejections. People thought I was crazy. I was doing this, and then one person said, "Yes, why don't you come? But I'm gonna give you only 3 months to try you out." I said, "I'm in." So when I
That's
was
it.
there, 2 months in, I was hired. And then I was there for a few years serving ministries of finance in emerging markets. Then the pivot point came. I thought I would never leave that, prestigious institutions. I learned the most traveling to so many countries. And then when I went to Africa, which was one of the key missions, and I found back then, more than 20 years ago, that people use feature phone. If you remember, Mary, we used to have phone with buttons, like Nokia
Yes.
phone that looks like a banana. Okay, now it's in a museum, right? um, and people use phone in Africa to transfer payment to their
Mhm.
relatives and parents in different provinces. And
Yeah.
I thought, you know, the fact that they don't have electricity at 5, they have to start lighting the candle, but then they use phone for payment before PayPal became famous. That is going to be a big revolution. There's something in my mind since then. So I came back to the headquarters in Washington, D.C. at the World Bank, and I started doing research on technology and decided to quit the best job in the world. I packed my bag, came to Silicon Valley almost 20 years ago, and since then I've been in tech. Started my career. Well, I got an MBA from Berkeley along the way that helped me transition into tech. And Paul Utility, as you mentioned, recruited me to join the part of the leadership team, which is a wonderful program at Intel. That was the most important pivot point for me when I worked at the World Bank and when I was at Intel, and I saw how technology really made an impact at the global scale. So I developed relationship with the senior level management, and later helped launch the first $99 tablet right after Steve Jobs launched the first iPad. And because I came from emerging market, because I worked at many countries at the World Bank, I realized that at the time, a lot of people couldn't afford iPad. The first generation was very expensive. So it also happened to be the time when Google launched the first Android, which was free, disrupting Microsoft that was very expensive at the time. So pulling different pieces together, create the product at the affordable price, launched throughout the world. And I was very lucky that I was in the right place at the right time. The product became very successful. So I had a good run at Intel for about 7 years before I decided that I'm ready for the next step. So I left and came to the startup world and later joined Skydeck VC by the invitation of Dean Shankar Sastry. He was one of the founders. He was a dean of computer science and engineering. He was like, Chief, you were, Berkeley alum. You got to come and help me with this program, coaching a lot of CEOs that we invested in and, wearing multiple hats, be advisors and so on. And I did that. And today I'm still a part of Skydeck. It's just that my role has changed. After Skydeck, I told Dean Shankar Sastry that I want to launch my new fund, my own fund. It's going to be better than Skydeck. So I teased with him. And he was like, what? What do you mean? I said, well, I think Skydeck is fantastic. But what we are missing is the impact piece. And that was before the word impact driven venture capitalist became the mainstream. And I said,
Mhm.
I'm going to launch a fund that generate financial returns and also impact returns. And I, co-founded and also launched a fund investing in different countries in Latin America, and of course, Skydeck investing globally, and with follow-on funds. And today, I launched a fund. I call Fourth Investment Fund. It's a fund one, and the thesis is to invest in the U.S. and also allocating a portion of the fund to invest in superstar entrepreneurs and companies in Southeast Asia. And along the way, because I do what I do, Berkeley asked me to come back about 4 years ago and said, look, in business school, we want to create the sustainability program to teach the MBAs on how to invest with impact lens. Why don't you just come and teach what you do? So by accident, I became a professor at the High School of Business, teaching the MBAs for 4 years now. It's a joy of life to be able to give back to the school and also help build the next generation impact investors.
That's amazing. So yeah, looking back, you can see that trajectory. You can see that you were in, like you said, lucky to be in the right place at the right time. But each of those steps you took with you and then went further into the next step and took yeses to some opportunities, and I'm sure you said no to other opportunities, so that you directed your path where you have now ended up. And obviously this isn't the ending up. You're completely continuing on that process. So you've talked about impact, and we here at Planet Wealth, that's a very important thing for us as well, because money is great. Money, we all need it. That's fantastic. A fund, a raising capital, whatever it might be. But if there's not a stronger purpose behind it, it's a hollow thing. It's just a thing to pay our bills, which again, I'm acknowledging we all need. But there's a why, there's a purpose behind it. So can you give me an idea from your experience and also your teaching at Berkeley, when you say impact entrepreneur, we still have to uh, do business, right? So it still has to be money transacted, it still has to be profit, it still has to be all those things. So how do you equate impact with that profit and bring it
Mhm.
in and still continue to be profitable?
Yeah. Um, that's this is a fantastic question, and I talk a lot about this with my students at Berkeley and also with the broader community. Impacts investing in itself is really a broad spectrum, right? Like you can look at it as from the nonprofit perspective that you give out grants and so on. You have foundations that try to help entrepreneurs in various fields and industry. To the other side of the spectrum, that is about profit maximization, right? And today we call this the I called high risk asset class would be venture capitalists or venture fund asset class. And you also have PE, private equity, and so on, and everywhere in between. Now, the history has told us that pure nonprofit, while is great, right? Sometimes you cannot bring the private sector or the capitalist to actually be a part of the community, right? Because they're still looking at the financial return and so on. To give you an example, CSR, corporate social responsibility and whatnot, that was really booming 15 years ago. Now it's kind of died out simply because, you know, um, there aren't a lot of incentive for people to kind of keep up with it. How do they measure it and so on? I am in sort of like the capitalist side of things that we are in the venture capital asset class or VC asset class. So we have to generate the financial return in this asset class. While every time before we invest, we have to have the line of sight on what the impact returns would be. Okay. And to tell you something fun, so when I launch and invest in Latin America, I pitched to my investors that okay, this is going to be impact driven VC fund, and that was like before this kind of trend.
The
Nobody
buzzword, yeah,
invested.
yeah.
I couldn't raise money at first. People was like, oh no, the word impact for them, it means lower profit. This is like the different spectrum into the non-profit path. And so I changed my pitch. I said, no, no, no. This is new opportunity. We're going to go into emerging markets. I mean, obviously it's higher risks, but because of our track record and because of, we have operating experience and so on, we're going to invest in these 5 selected countries, mainly Spanish speaking countries and so on. And I raised funds. Okay. And then I started investing, but then I did impact investing. So every quarter I did the report measuring the impact returns and also the financial returns to my investors. And my investor was like, oh, impact is actually a bonus.
Yeah.
This is fantastic.
Yeah.
We should do more like this. And I was like, it took a while. It took a while, and also to train so-called LP, limited partners, or financial investors, and what it really means when you invest in a VC asset class. Um, Now, I obviously have a joy doing this. This is my fourth fund that, carry sort of like the impact investing theme, but impact can also be defined a little bit differently. So it could be defined in a way that you create financial return along with social and or environmental return. My current fund, I look at this a little bit more broadly since it's my fourth fund now. I said, you know, we should really aim for economic returns. The impact on the local economy throughout Southeast Asia that the technology can bring, whether that may be the cross-pollination between the technology transfer between the two regions. If the entrepreneurs here wanted to scale abroad and they're looking to set up a new shop, additional shop, whether or not, they would generate employment, whether or not they could impact the society financially in a different region. All of those I classify as economic impacts, in addition to the kind of the thesis, which is social and or environmental area that we are looking to invest.
Yeah. That's fantastic. Yeah. I'm so glad you brought it into the numbers as well as the actual impact itself, and how you've kind of come around to the fourth fund now and looking a little broader to that aspect. So what advice would you give entrepreneurs that are seeking funding in this way and they feel they have an impact, to provide, to offer, especially those from any other, all backgrounds, not just one in particular. What advice would you give entrepreneurs seeking funding in this way?
I think matching the thesis is very important. The entrepreneurs need to understand what really drives the VC to invest. Each VC, they're different. It could be strategic. It could be corporate venture capital arm of a big corporation. It could be private VCs. Understanding each VC firm on how they make the investment decision is really key. Align with the thesis and align with the goal. So when you talk to them, you know exactly this is what they are looking for. Okay. Um, when I hear the pitch, people talk about impact, but I want to be very clear. It is not impact first. Impact is the criteria that, if you have an impact, I would consider investing. But whether or not I'm going to write a check and whether or not I'm going to really invest, obviously I'm going to look at the business model and the potential returns of the funds, because I have the investors in the funds who are
Mhm.
pure financial return people. And the
Yeah.
reason they invest because they demand financial return, right?
Right.
So, and different funds are different. Um, I like to talk to the entrepreneurs in a way that here is the strategic return, here's the impact return, and here's the financial returns. And then we have a deal.
And how do you feel that entrepreneurs have a pretty steep learning curve in this, that they aren't used to looking at it that way? Or are do they catch on pretty quickly?
I think it depends. Um, A lot of entrepreneurs, when they look us up, they know that we are really impact driven. So typically, I hear here's a business model. Here's who own the cap table, meaning the existing investors or previous investors, and here's the impact that they think they can deliver to the society. And better yet, the entrepreneurs who I would say sealed the deal with my fund, and they said, okay, and not only that, I'm ready to scale, and here's why I want to work with you. This is how I see you bring the value to me. It could be, Berkeley Network, right? It could be the research that we support. And it could be the fact that they want to scale to Asia. And this is the impact that the fund wanted to bring to the different region. And they said, okay, when we hit this milestone, I would like to coordinate and work with you to see whether there might be the opportunity for them to scale abroad. So all of these things, when I hear this, they bump on top of my list to
Yeah.
do
Yeah.
to do due diligence.
Yeah. Yeah. And know your audience, right? So
Yeah.
if I'm going to go into your fund, I better know what are the buttons that I need to push in your mind to think that I am a viable opportunity for your fund. And if I'm just doing the same pitch to every VC and
Mhm.
I'm not gonna make it as well as if I know the audience, know what's behind it, know the people behind it. I would imagine I would go and do research on you, do research on the people, the strategic people in your fund to understand what you've done in the past, where you're headed, what's important to you, and see if that's aligned with what I'm offering. That's kind of standard stuff. Do you find people, or standard to me because in terms of experience, customer experience, this is what it's all about. It may not be as standard to everyone else. Do you find people not as versed in that kind of process to find the alignment first?
A lot of them, surprisingly, some of them did do a lot of research before they actually met with me. And they have those, the standard pitch, which is not wrong, right? Like,
Of course.
they met a lot of VCs, and here's how they pitch and so on and so forth. I also listen to those, but it's just never it's a little bit harder to click. And I think it also come with the style too. When people talk to me, they would know immediately that I'm very, very transparent. I already know when entrepreneurs come and want to talk to me that they want to sell, they want investment. Okay,
Of course.
that's obvious.
Yeah.
Um, the entrepreneurs I like are those who do not, allow me to second guess. Meaning they're gonna say, "Here's a company," and
Yeah.
the first meeting they treat me as their partner. Like, here is what's going well. Here's the challenge, and they take that moment to learn from partners in my fund. What do you think about this? This is what we want to do next. What would be your recommendation? So at least, even though if it turns out we don't fund them, right, they learn something from that hour that we work together. And to me, it's not a second guess because when they're super transparent, that here are some of the problems, I don't have to figure out because we see a lot of views. We know there are challenges. If they are trying to cover it or just want to talk about a positive, I mean, which is super normal.
Yeah.
I mean, we're going to have to figure that out anyway. So it better tell me now so we can
Yeah.
work together and speed up the process.
Yeah.
So that's my style.
Yeah, well, and plus all I have to do is in the short time we've been talking, I already know that if I were going to go pitch to you and your fund, I would not do it and how I would pitch to maybe someone else who is straight, just here's the pitch, give me the pitch and we'll decide.
Right.
Look at your background. Look at you how many 49 I think you said rejections before you found one person to give you a chance that's not a typical way to find a position. So I'm not going to use a typical way to communicate to you what I'm offering and also needing. I'm going to come at it from that kind of perspective. I'm going to put it all out there because
Mhm.
that's what you do. So that's amazing. That's fantastic. So let's switch gears. I know we're both in the San Francisco Bay Area. I'm a little more removed from it from you are, but I'm very close, and I go there all the time. Um, what emerging trends are you seeing in technology specifically that you're excited about? Since Planet Wealth is at heart a technology company, it's a fintech company.
Mhm.
So what emerging trends in technology you're excited about, and how do you see them shaping the future, especially for and of venture capital?
Mhm. Mhm. This is very interesting. Maybe I'm gonna answer it in a way that, when I look back, about 10 years ago. Okay. 10, 15 years ago, there was sort of like a mantra, in Silicon Valley, right? Saying that software eating the world. You It's very hard to find back then, it's very hard to find a VC who would even consider investing in a hardware company or even a hardware attached company, meaning, there's hardware, software application, and services component. But if you have hardware, then they wouldn't fund you. Right. And that trend had been ongoing for about a decade, until I would say around 5 years ago, 3 to 5 years ago, when our world realized that we need to really drive towards net zero by 2050. The pressure from the international organization, the United Nations, the World Bank, the governments from different countries. So in the last 3 to 5 years, you see a lot of recalls, deep tech and hard tech, which involve hardware, robotics, microprocessor, semiconductors, and so on. Energy, EV, all of these areas, right, in tech involve hardware and also fixed costs. The governments gave out non-dilutive grant to incentivize the entrepreneurs and also the private sectors and the VC to come in and invest after they develop, say, prototype products or proof of concept. This year, things have changed. And I have a lot of conversations with my co-investors and VCs here in the US and also abroad, particularly in Asia. Software is coming back. Now, it's not going to be software only. It's going to be the kind of the business model that even if you have hardware, because we cannot avoid hardware, we double down on robotics and energy transition and a lot of other technologies. Because of the supply chain complexity that is happening around the world, the way that we want to see the entrepreneurs monetize in terms of the business model is going to come from software. Okay. So what I see as a trend in terms of the business, not before I go into the vertical, in terms of business model is we don't give up on hardware. I actually like hardware. I think it's very important. Um, but the way that the entrepreneurs and CEO have to adjust in the business model is to make sure that you still have recurring revenue and the subscription, the high margin part of the business in a way that even if the supply chain in the world has changed, it's going to create an impact, but it's not going to disrupt your business. And I think that's the key. Now, if I look at the trends in terms of the verticals or industries that we've been talking about, besides the business model, I mean, obviously, we talk a lot about AI, and it is so bifurcated that you see a lot of AI companies that are oversubscribed. The valuation was like, you know, through the
Yeah.
roof, and you also have a lot of other small companies that never get funding. So my point is, because this year is it's a difficult year, there are a lot of venture capital funds who cannot raise money in a follow-on fund, not even fund one, fund two, sometimes fund three, that they don't reach their target or couldn't raise at all. And so the fund size shrink. Sometimes, they have to lay off some people in the firm. So the pressure comes down to the entrepreneurs. And when the pressure comes down to the entrepreneur, the valuation will get pressure. The business model that I mentioned about, they're going to have to pivot or figure out on how to make it sustainable if they already raised money and, they have a long runway. So that's great for them. But also, they should expect the fact that the market will be so tough that, the VC still have to deploy, but they're going to deploy towards, the companies that they believe or perceive that are the top companies. That's why there's going to be the group that is oversubscribed, and there's going to be a group that never get to raise at all. In the middle, it's going to be very, very hard. So that's AI. Space continue to grow, space tech. But of course, that's also hardware, and there also software as well. I think overall, the climate tech or climate transition, going to get a lot of pressure as well. We, remain to be seen. As you and I know, we read news every day. Non-dilutive grants and the policy, not just the government in the US, but also abroad, that help incentivize entrepreneurs and also private capitals to come in after they develop the product. If those kind of grants reduce, I think it's going to be a lot of pressure, including health tech and biotech, which also rely partially on from the grant from the government.
Yeah. Wow. Okay. So let's take a step back and look at your personal life a little bit, because we've talked about your professional life and all of the incredible things that you've done, but there's always a story that led you where you are from an early age, or from an age that what gave you the tenacity to decide you were going to go to the World Bank and you were just going to pitch people and cold emails until you found someone to give you a chance? There was something that happened in your life that's the way you look at the world. So tell me a little bit about that. What were you doing before? And you said that, the economic situation when you were growing up really impacted you in the direction you wanted to go. How did that impact you? Why did that impact you? And what part of your life kind of made you go this direction?
I think you actually said it in the beginning of the podcast. I think it's the purpose. The purpose and the drive allow me to fail because I know exactly what I want since at a young age in high school. It took me more than 20 years. And as much as I talk about success in my career, professional career today, I actually fail way more. It's just that people don't really talk a lot about it. And when you allow yourself to fail and learn from the experience, you get up and you do it again. Maybe you pivot. My first fund, let me tell you this, Mary. My very first fund that I wanted to raise, okay? I call fund zero because right now I have 4, right? I call fund zero. I did not raise a single dollar.
Yeah.
Not even one. And I had all the track record. I launched the product. It was like $1 billion. I've done this, I've done that, all the brands and so on. And I got to myself, why? But I didn't give up. I was a little bit too early for the market, especially investing in emerging markets at the time. I mean, granted, it was like 10 years and whatever years now. People were not ready. They didn't understand the VC asset class, right? So there's sometimes I have to put things in perspective and learn a little bit more about the market and then, pivot and do it again. So it turns out, even though I'm from Thailand, from Southeast Asia, the first 3 funds, it has nothing to do about Southeast Asia. So, but the purpose is there. Since 1997, I just did not know what shape and form that I'm going to contribute back to my country and region until this fund that I just launched September last year. I already invested in 10 companies in 10 months. I hit the ground running. We also don't do pre-deals. We have money in a bank account and we start doing deal. We source we do due diligence, and we invest. It took me more than 20 years to finally give back to my country and the region in a way that is so profitable to my investors and also creating economic impact. So it's the
Wow.
purpose.
It is. That's fantastic. And, it's very important in this age of instant gratification, in this age of wanting instant results, instant information, instant everything, to really look at this as your purpose is much bigger than that. And if you have to wait 20 years for it, you're not waiting, you're working, you're failing, you're succeeding, you're working again, you're failing again, you're succeeding. And that's what it's all about. I mean, that's life. Every people ask me, "How you doing today, Mary?" And I basically say, "Well, I woke up today, so it's an incredible day." Are you kidding? I'm doing amazing. I actually woke up. So from there, of course I'm going to try and make impact. Of course I'm going to try and have purpose. Of course I'm going to try and look at the short term and the long term. That's so wonderful. I'm so glad that you shared that with us. Thank you. Um, bringing it back, bringing it in now. We like to kind of end our episodes, since we talked a little bit about personal. We like to end our episodes with kind of a fun anecdote from our guest. Can you share a story or a fact or an experience about yourself that our listeners might find entertaining or fun or funny?
Yes.
Anything?
Yes, sure. A lot of people ask me about my name. My name is G, like a car, because my parents really like cars. So I have a younger brother. Um, his name is Benz from Mercedes-Benz. You know, when parents like have a baby boy, they kind of give like a luxury name, and they just gave me like a recognized name. So now I have a daughter. She's 11, and her name is Tesla. And at the time, it was before Tesla IPO'd. Okay, everything was going well at the time. It's like, okay, I'm gonna place a bet. Her name is Tesla, and then my brother has a daughter, and he named her Porsche. So we are on a race here. Who's gonna have a better car in the extended family? So that's a little
I,
bit
I
about
think you're going
myself.
to win. I think your daughter's going to win. I tell you, put those two next to each other, and there's no competition.
No,
One's going to
too
be way
easy.
faster. Yeah, I vote you. I vote your daughter.
Thank you. Appreciate it.
Thank you so much for sharing this time with me. And I want to remind everyone that all of the contact information will be on our podcast page with my conversation with Jeep, and you can find all of her links and everything there. Is there? I mean, you've paved such an incredible path for others to follow, and specifically as a business leader. Um, is there any last piece of advice you'd like to give that shows your gratitude for the path you have in front of you and behind you, that you could share with us?
Yeah. I told my students all the time, NDA students at the household business at UC Berkeley. They also, a lot of them want to do what I do. And I told them that when I was in their shoes almost 20 years ago, I had no idea I would get here. I did not know I wanted to do VC. Um, the way that I told them, I also, as we talk, you have to have purpose in career and in life. And you're going to figure out what is best. Maybe 10 years from now, 15 years, or 20 years from now, VC may not be a thing. And you're going to
Mhm.
have to figure out on how to create a business model in a way that help you achieve your goal, in a way that fit your career and your path, and your belief. Because ultimately, whether that may be entrepreneurs or investors or large enterprise companies, the reason they work with you is because of who you are. And that's what I've learned. So I would like to tell, everyone and entrepreneurs that you got to believe about your purpose and about who you are. And even in the difficult time that we have today in 2025, whether that may be, everything from economy, uncertainty, politics, and whatnot, we see great entrepreneurs emerging every day. Think about Google. It emerged during the tech bubble. Lyft, Uber, they emerged during the worst economic recession, 2008, 2009. So we are here to invest, and we are here to support them. So don't give up. We're going to figure it out together.
Yes. Thank you so much. That is so wonderful. And that purpose really informs the decisions you make. If you have that purpose, you will be able to make the decisions that align with that purpose, and then that will get you further along in your path. I'm so grateful that we were able to spend this time together. Please, everyone listening, if you liked this conversation, please share it anywhere you know of podcasting or people who are interested in podcasts, and take a look at our podcast for others like this. However, I don't think there's going to be anyone quite like Jeep, because the individualistic part of all of us is our previous experience that we bring to the table and bring to the path that we're on. So thank you, Jeep. Thank you so much for sharing this time with me. I'm so happy we connected.
Thank you so much. Thank you for having me.
Thanks for watching. If you enjoyed this episode of Planet Wealth Fortunes of the Brave, check out our other videos for more insights and strategies to elevate your financial freedom. You can subscribe right here and hit that notification bell so you never miss an update. Join our community and take your financial future to the next level. I'll see you in the next video.